What's up everyone, welcome back to Free to Be, and this week I want to talk about taxes. Now disclaimer, this is in no way tax advice on how you should treat your taxes. This is just general heads up type information for you to think about taxes, especially if you're earning extra income from other sources that aren't your primary job or any other type of income that's paid out to you before taxes are deducted. So you can think about, a platform like user testing, right? I've been using that a lot and I've generated a few $100s of income using that platform. Now they have a certain threshold on their site where they won't actually issue you a tax form at the end of the year, and they definitely don't deduct taxes for you. So it's a good thing to know to track this information. And really what I want to do in this video is really just go over quickly on how I approach things and how I account for taxes that I might have to pay at the end of the year for the preceding year. And that's what we're going to be talking about today. So let's get started. Alright, now before we get started, as always, if you're new to the channel, go ahead and hit the subscribe button down below for me and turn on those notifications because we are going to continue to expand the content on this channel. And if you're just interested in the financial literacy stuff, then check back every Sunday because that's when I upload these videos. Alright, now so in my setting, for example, I have a normal 9-to-5 job, and in that job I get a paycheck. And that paycheck is a gross amount, less taxes that are withheld for me, and that's where I get the W-2 at the end of the year, and then I get a net amount. So I don't really have to think about taxes in that respect. But there are times where I might have to pay a little bit extra based on withholdings, if they were not enough, or if things change throughout the year, the circumstances, whatever it may be, but it's never really a crazy amount. However, when you start venturing off to create your own streams of income, whether it's investing or a second job or whatever it is, taxes might not be taken into consideration there. So you guys have to factor that into your life. You have to factor that into the budget when you're making that extra income. So for example, if I made $1,000 of extra income in 1 month and that money was given to me in a gross fashion without any taxes taken off, I have to remember that I have to account for that $1,000 when it comes to tax filings, because I am probably going to have to pay anywhere between 30 to 40% in taxes on that $1,000. So when you're doing this, my rule of thumb is always consider I have 40% less than what I have. So in the example of making $1,000 extra a month, I automatically will take off 40% of that money, take the 600, deposit it, invest it, whatever I want to do. With the other 400, I throw it into a savings account. And that savings account will gain some interest, and that interest will then be taxable as well. But basically what's happening is that that 40% is not being touched throughout the year. And then when I file my taxes at the end of the year, if it ends up being a little bit less than 40%, then I get a little extra money. And if it ends up being a little bit more, it's way more manageable than being hit with a 40% tax bill that you had no planning for, that you did not account for throughout the year. Now this is really important, especially when you're utilizing the online platforms where you can make some extra income. So for example, user testing pays you out $10 per test, but they don't take any taxes off the top, and they might not actually even issue you a 1099 or any kind of tax form at the end of the year, because you need to hit, I think, $600 before they consider you like a contractor for them, where they issue you that tax form and they have to report it to the IRS as well. But if they don't, I mean, if you still made like $500 off that site, that $500 is taxable income, guys. So you do have to pay your taxes on that $500. So it's very important to kind of figure out exactly what tax bracket you fall out into, or just follow my, rule of thumb of taking 40%. Just 40% is a safe bet for most people. So I usually think that that's the best approach to take, is just to take the 40% off. You just made 40% less than what you actually received, and then put that away. And so it doesn't just apply to ways where you made money, it applies to interest as well. If you put $1,000 in a bank account and made $50 interest in that year, that $50 is taxable. Now banks usually do issue you some kind of tax form because they do want you to file that, and they need to actually report that to the IRS as well. But I'm more talking about the independent contracting sources. If you start your own business where you're a photographer on the weekend, that's all taxable income. If you sell your cryptocurrency, that is taxable income. If you sell your stocks, that's taxable income. And so it's really important because you want to make sure you're keeping track of every type of income you're making, all the types, and make sure that you also are tracking if that income has been taxed before it comes into your hands. Because if it hasn't, you're going to be hit with a tax bill, and you're going to want to make sure you prepare for that adequately. And that's it, guys. I just wanted to make a quick short video to bring this to your attention because I have been talking about ways to make extra income and extra income sources in general, and it would just not be right for me not to touch on the taxes because taxes will affect you in some way. So make sure that you're taking account taxes for any kind of extra income you're making. If it's not already taxed, make sure you save. A good rule is, again, the 40% is saved so that you can pay that tax bill when it comes due at the end of the year. And that's it, guys. I just wanted to bring that to your attention because it would not be right for me to talk about how to make more money, how to make money online, how to build a business, how to invest without reminding you guys that this is all taxable income and that you have to factor that in when you're planning your year. When you're planning for filing your taxes the following year, if you're getting gross sums of money without taxes taken out of it, make sure you factor that in. Make sure you withhold from yourself 40%, 30 to 40%. If you want to be, more careful and cautious, do the 40% rule. Put that 40% away, put it in a savings account. It'll generate some extra interest for you as well. And then, at the end of the year, if it ends up you only owe 32%, then you're covered. If you owe 41%, then that's just only a 1% difference. It's just a good cushion to give yourselves while you're building this wealth. Hope you enjoy this content. If you did, go ahead and hit thumbs up button down below. If you're new to the channel, don't forget to hit the subscribe button, turn on those notifications. If you're interested in financial literacy, we cover that every Sunday on the channel. And as this channel continues to grow, I bring you guys extra bonus content on my journey, my life, and how things are going for me. Guys, I appreciate you stopping by again. If you've been following me for a while, thank you, and we'll see you next time.